What's going on, everybody? Michael and Coco here. Welcome to the Stock Market Brief Show. In today's video, we're going to be looking at some longer term. Are you already bored? I'm not surprised. She's always bored. Today, we're going to be looking at some longer term charts and then also go over some things that I've noticed around volatility just to prepare you for the months ahead. Let's just hop right into today's show. Alrighty, welcome back to the computer. We're going to start off with a seasonality chart. Yes, help us navigate the way, seasonality. We're looking right here at a post-election year seasonality chart of the S&P 500. And really what I want to just point out is, yes, today was our first trading day of August, Monday, August 2nd. And from a seasonality perspective, post-election year, you can see that August, September, and even October is relatively weak, right? Just see that line going down. If you look at the average year, it's pretty flat overall too as well. Okay, we are in a post-election year. Seasonality is suggesting that we see some moves to the downside. I want to pair this with another seasonality chart, and that's with the volatility of the S&P 500. Now, this is skewed completely. I mean, you can see March right here. We're looking at a 20-year range, and all of a sudden, like, March is way up here. You know what skewed that? Well, the pandemic skewed that completely, so now it's just way up here. However, if you're focusing on right around in this range, where we're actually at in August, September, October, you can see that volatility picks up here. Now, this is also a 20-year range. Keep in mind, if you were to look at the last 2 years, 3 years, 4 years, 5 years, it doesn't quite look like this, but if you do incorporate more time into the chart, you will notice that volatility does typically pick up in August, September, October. All right, and we're going to see that here in some volatility charts that we look at. And nope, that doesn't mean there's a crash coming. Sorry, folks. Even though that typically does happen in October, we see those crashes in October. That's not what I'm trying to portray here. But what I am trying to portray is that we might see larger swings in the indices. Now, if we look at the last month's performance, utilities, real estate, healthcare, pretty defensive up in here, especially utilities taking the lead. If you watched our interview with Michael Guyad, and he talked about utilities are really, they have to perform here given the current context of the market when you start to see bonds go higher and the yields continue to fall. It's like the market is pricing something in. It's very interesting dynamic to see all the indices pressing higher and higher and higher, but then you're also seeing the bond market press higher, and now you're starting to see defensive sectors also catch a bid. If you look at the last 1 week, you also see utilities up here. You see healthcare up here. You see materials up here. Real estate. All right, so it's still defensive. And if you just look intraday, starting the month off, utilities taking the top spot. So we see strength coming in utilities. This is interesting. Interesting development. Is that going to continue? I'm not too sure, but it seems like seasonality is playing a role here, because typically if we have the VIX rise and we have typically weak performance in the S&P 500, well, during weak periods of time, we usually typically see rotation into defensive sectors, and that would be utilities, and we're starting to see that. So it's 1 day in the month, so we can't read too much into it, but at least be aware that it is right now taking place. Now, if we look at the monthly time frame, we've been disconnected from the monthly EMA for quite some time. We're looking at the SPX, and starting the month off slightly down, nothing crazy. We're in very bullish context overall. I will want to note that the price percent oscillator is starting to curl itself over. So it's still very bullish long term because we're looking at monthly charts. So this is bullish long term, okay? However, we haven't had a connect with the EMA for quite some time, and this is frequently tagged. So I would say 4,261 could definitely be in the cards if we see continued weakness in the month of August and even potentially into September. Okay, but where the monthly 5 EMA stands right now is 4,261, which is really, it's not that far away. I mean, it might seem like Armageddon if it went and touched there, but just note that if we do see it come down here and all that fear and panic and the market's going crazy, the chances are you'd probably be able to catch a bounce right there. IWM is looking, in my opinion, pretty darn weak. I'm looking at the PMO down here. It is reaching a previous high, and we talked about this in previous videos. It's still in bullish context, all right? So it hasn't had a bearish crossover, but note that last time it was up in this range, and then it crossed over. we didn't go anywhere for 1, 2, 3 years. It was doing nothing. All right, so keep that in mind. We're up in here, and now, actually, what's interesting is we haven't seen a down month. This was like our first down month in, I don't even know. Oh my gosh, like 6, 7 months maybe. Yeah, that was a down month. So that was an up. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Was that our first down month in 9 months? Jeez. And we closed right there at the monthly 5 EMA, and now we're starting to move slightly below it. And we broke out of this channel. So just be careful with small caps as this is kind of rounding off here. We broke through this channel, which could be an exhaustion break. I'm not going to read too much into it, but if we start cracking down back within this channel or take out the low of last month, then things could get a little dicey. And to be quite honest, you really want the small caps to perform here in order to really keep the momentum going in the indices that we've been seeing, because if we start to see these lag, it's not always the greatest sign. And if you look at the NASDAQ also very bullish context, but I will note that the PPO has been losing steam. It's been losing momentum. Take a look at this histogram right here and the price percent oscillator. If this crosses over to bearish, you need to be very careful because you're not going to have the wind at your back going long here. All right? See, when it crosses over to bullish here, you had the wind at your back up until it crossed over to bearish and started flattening out, right? And then it was like boom, boom, boom. That was in 2018. That was crazy because we were seeing stocks take 50% haircuts, the big tech stocks there in late 2018. All right, and then it was pretty flat, crossed over to bullish, boom, 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 wind at the back. And then we had the pandemic, all right? Crossed over to bullish, boom, wind at our back, whoof, all the way through. Okay, so long term it still holds bullish, but just take note, histogram's dying off. Momentum flattening out. This could resolve in one, price or time. What does that mean? It means that it can consolidate sideways for quite some time and then break out and continue its trend, or it can fall down and then start recovering from there. All right, price or time. What else do I want to point out? Well, first off, the monthly 5 EMA is at 14,401. So keep that number written down, because if the the NASDAQ comes down to that level, every time we've touched and tagged the 5 EMA, we went slightly below, but the month always bid it right back up. All right, so if this bullish momentum continues, I would say if we get below the 5 EMA, look for the bulls to start stepping back up to potentially push it back and close back above the monthly 5 EMA or right around on it. Dow Jones Industrials hasn't gone anywhere for now 4 months. Just a bunch of chop these last 4 months. Look at it, hit a high here. Then you saw this somewhat of a large range candle right here. It was a hammer candle or whatever, dragonfly, whatever you want to call it. I don't know the names of these. I always forget the names. I just like to read price action. All right. Then this month, take note where these last 2 month candles tagged. 5 EMA. Boom, found support. Boom, found support. Tell me that that's not algos just perfectly right. Boom, tag, boom, let's move it up. Boom, that's the buy marker. So keep an eye on the monthly 5 EMA because it can act as support. To note, price percent oscillator, bullish. However, it's starting to lose steam. The histogram's kind of curling over. If you want wind at your back, like I said, and you want to be a trend trader or trade momentum, you don't want to be going long when this stuff crosses over to bearish because, I mean, look at what happened right here when it crossed to bearish. It really didn't go anywhere for the better part of a year. Just big wild swings. Okay, so it's just something to be mindful of. BKX as well as KRE. So we're looking at the KBW Bank Index, largest 24 banks or institutions, and then KRE is the regional banks. They look the same, and I will say KRE looks weak. Now take a look here. The last month we found support at the previous area of resistance and resistance. And every time it came to these levels, something big has happened. Like here's the 2008 financial crisis, right? Bam. When it came back up here, here's 2018. This is when we saw that big pullback. That was during the whole, I believe it was 2018 was the repos. And then right here, it came back all the way back up. And then this was the pandemic. Now we got unlimited quantitative easing, and bam, we broke through this resistance. It then becomes support. Is this a bear trap, or a bull trap, I should say? Maybe, maybe not. But the banks do look, I mean, it's in bullish context, but the monthly 5 EMA gave way, and we're having a weak start to the month so far here. So if we start breaking through the low of the previous month, which is right at around 115, you know, that won't be good. Especially if we have a close below that. That would be not good for the financials. Let's look at transports also. The monthly 5 EMA gave way. That is not a good sign. We haven't had a close down there for multiple months. So this is a change in sentiment here, right? So the price percent oscillator also, histogram dying off. This is curling itself over as it reached a high from previously right over here. Now we're starting to see weakness. It is still bullish, okay? It hasn't had a bearish crossover, but just note that momentum is slowing. You can see that here in the price action. If this continues to lag, transports, if you follow Dow theory, this is an important one. You need transports to perform, especially the industrials, right? You want to see them move hand in hand. Let's look at the indices. Start with the S&P 500 on the weekly time frame. Been showing this chart frequently. Rising wedge, rising wedge, rising wedge. Falling wedge, falling wedge, falling wedge. The construct here, it's still being well respected. All right, we're going to get into some other charts for volatility, but just note, we are here at the lower range of this channel. Last time we were there, guess what happened on the weekly time frame? It bid right back up and closed back within it. Starting to see a little bit more weakness at the start of the week. Maybe that's just a little shakeout. I'm actually surprised. I was more surprised to see weakness right out of August when we saw the gap up. I thought that we'd see more of a move to the upside, just given just passive investing. It's a new month. We have new flows coming in. So to see August start off gapping up and then rolling itself over, not the greatest start, but you know, it's also just one day. All right, so let's take a look at the weekly chart on the VIX. Really what I want to point out here, and I posted this on Twitter. You can follow me there if you don't follow me there. The Bollinger Bands. This is interesting because what we're seeing right now is contraction within the Bollinger Bands. You can see the Bollinger Band width indicator down here. It's falling below 35, and the last time it's really been at these lows was back here in August, September-ish area of 2018. And what happened shortly thereafter? We had those Bollinger Bands contract. Well, we saw a spike to the upside. So not only do we have this construct right here, this falling wedge, we have the Bollinger Bands contracting, which can lead to a Bollinger Band squeeze. A couple other things to note is just look at the last 1, 2, 3, 4, 5, 6 weeks right now. 5 weeks working on 6, all higher lows. So as the S&P 500 is making all-time highs, and it's sitting right around all-time highs, the VIX has been putting in higher lows the last 5 weeks. Now, mind you that the last 2 weeks, it's been putting in lower highs. So as it stands right now, this could actually potentially be bullish for this week. Maybe, because we're reaching up to the upper range of the Bollinger Band. Perhaps we fall lower and these contract tighter before we see potentially something take place. If we look at the RSI, you can see this is also curling up. Now it is now above 50. I mean, now it's flipping over to bullish. So be mindful of these levels. Yes, it could be bullish because this can sink, but also, I mean, we've been just treading higher, and the index has been too. If you look on the daily time frame, you can see it a little bit more clear here. You can just see the VIX chugging along, moving up. Bam, bam, bam. The RSI on the daily time frame also above 50. But we're not really seeing any dramatic spikes in volatility, at least in the S&P 500. We're just seeing is kind of just grind higher right now. So it does seem like it could be setting up for something. As far as when that is, I couldn't tell you. But what I can tell you is if you're aware that this is taking place, you're not going to be caught off guard if all of a sudden we just get this rip-roaring volatility spike. Equal weight, this was interesting. Equal weight, the S&P 500 broke out, and this was actually a very bullish sign, but then today, a very bearish, right? We shot way up, we were looking good, and then all of a sudden it reversed completely and closed at the low of the day. That's an inverted hammer. Typically means a reverse. You can reverse back, and it closed back within this channel. We'll see if this wants to continue. We're still above the 50-day moving average, but if this gets followed through to the downside, I mean, it's gonna be hard for the S&P 500 to chug higher. And these have been diverging. The S&P 500 is down here at the lower range. This is equal weight, and equal weight hasn't really gone anywhere since early May. Okay, we're right there. Meanwhile, the S&P 500 has just been chugging along. And you could look at the value line geometric index, the XVG. Also, you want to see these move hand in hand, and these have been diverging. I've been talking about that. A lot of people have probably been talking about this. Lower highs, higher highs. Lower lows, higher lows. These divergences will matter when they matter. I couldn't tell you if it's going to matter to resolve to the upside or the downside. But if this doesn't resolve to the upside, if we don't get above this 50-day moving average and break through this trend line, it's going to be hard for the S&P 500 to keep just doing what it's been doing. You need these to play ball. And then you take a look at the advanced decline. Also been negative divergence. We've been calling this out. It's sitting right there at the 50-day moving average and the 20-day moving average, which is right between the Bollinger Bands. You know, we need to see this. We need to see this start breaking out to the upside to see this continue its legs. We can't just continue to see this diverge. If you look at advanced decline volume, the NYSE advanced decline volume, just this thing has been just bleh, just falling, just bleh, not looking good. All right. So is this going to resolve to the upside, and then all of a sudden we're going to just get this massive breath to the S&P 500? Super possible. Absolutely. But as it stands right now, the divergence still holds. So if you're experiencing a lot of chop in the marketplace, don't be shocked, because this all plays to it. If you look at the daily time frame, look, we gapped up, strong move, started chugging higher. Didn't quite reach to an all-time high, but we weren't far away at all. We still aren't. And then it reversed and closed at the low of the day. Bearish engulfing candle, comparatively to the previous trading day. Also note, price percent oscillator crossed over to bearish. Momentum's been slowing, so that's a negative divergence and a negative divergence here. This is not the time to just go all crazy long as we're seeing this. We need to see this resolve in order to feel a little bit more confident. However, if you take these two indicators off when you're looking at momentum, then you look at just the moving averages, yeah, we're in bullish context. Okay? So we are in bullish context overall. We're still above the 20-day. We're still above the 50, 100, and 200. We're just seeing the market play games right now, right? With look at these last 4 or 5 trading days, just chop, 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 not going anywhere, but yet the internals are still diverging. All right. If you look at the BP SPX, this suggests that we can still go higher, right? So this still says, hey, we have room to go until we become overbought, or overbought. All right. Dow Jones, I'm trying to move along a little bit quicker. On the weekly time frame, we are sitting right around the weekly 5 EMA. It's still early in the week. We'll see what plays out. Also to note, momentum. It's been slowing down. So this is interesting. This is important to point out. You don't want to necessarily go long industrials unless if you see quality setups intraday or maybe like a couple day swing trade. But if you're holding long term, you want to have this cross over to bullish. Boom, boom. And then you want to see these signal lines spread. So you can see the black line is nicely spread here through the purple line here, and it's moving up. It's trending up. It's a good sign. But this crossover to bearish, still above 0, so that's good. But you can see as it's crossed over right here in June, it hasn't gone anywhere. So momentum is slowing. And what do we say that this can resolve? Well, it can resolve in price or time, and right now it's been just consolidating sideways. I will note that the Bollinger Bands are getting tightly contracted here too, so perhaps that's setting the stage for something as well. If you look at the daily time frame, you can see it try to go for it, try to break out. We had a little gap up, we pushed higher into around 35, where was it? A high, that was an all-time high, 35,192. That was an all-time high today, and it completely reverted, tagged the 20-day moving average, and bounced slightly from there. So bearish engulfing. Actually, this candle engulfed 1, 2, 3, 4, 5, 6, the last 6 trading days. That's not the greatest sign to see that, all right? It needs to be confirmed. So if we start closing lower, then yeah, I mean, by the way, we still have a lot of support down here. So it's not like you can't just be tactical and buy at the lower Bollinger Band, the 50-day or even the 100-day moving average right in here. It's not going to be one solid move to the downside. It could be, but typically what we've seen is these dips, they get immediately bid back right back up. Okay, so let's see if there's some strength that comes in. Bearish crossover taking place here and momentum slowing down here as well. All right. If you take a look at transports, why is it so small? Let me make this bigger. All right. Transports, I wanted to see this start breaking out to give more confidence for this breakout. We didn't get it. We came up again, tagged the upper trend line here, reverted to the low. Are we going to come back down and test the lower channel again? We are below the 50-day moving average. That is starting to flatten out to turn down, which is not a good sign. Meanwhile, the 50-day moving average on the industrials is just trending up. Boom, boom, boom. So this has to resolve itself. It can't just hold this divergence for a long, it can go for a long period of time, but you need to see it resolve, and it could resolve to the upside or the downside. So you just need to be mindful that this makes it a little bit more difficult of an environment to trade in. Let's look at the NASDAQ 100. This to me is probably the more stronger looking, at least the XLK. So tech, mega cap, but people go to there for, I guess, safety in quotation marks. They've been doing exceptionally well. We did break through this trend line with literally no price discovery. Boom, 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 boom. Fell a little bit, boom, 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 boom. And now we're kind of trugging sideways. Notice that the RSI, losing momentum, diverging. Same with the price percent oscillator. Okay, so we're seeing a little bit of chop back and forth. Bollinger Bands are kind of contracting here. Not too much, but the overall context is still very bullish. We're above the 20-day, above the 50, 100, 200. If we get a crack lower, I'd start looking at this previous low right here and then the lower Bollinger Band. I think we would bounce from that area, and I think people would try to still continue to buy the dip unless there's some crazy event takes place that just really just scares the market and we see this continued selling pressure, which is always a possibility. That's always a possibility, but if you're following price, which is the most important, price isn't lying. Price, the market is pricing this in higher, right? Keeps on chugging higher. That's just what's taking place. And if you look at the BP NDX, it's above 50, which means that we can still have the ability to move higher. We're not overbought, not oversold. This is bullish. Things look fine there. The Russell is the one that I would just be most cautious of. Look at it looked like it was weak, and then we're like, yay! And now we're starting to see weakness again. So all of a sudden that fear is coming back. You can see the RVX, volatility for the Russell. It's been putting in higher lows here too. It's still within this construct. The PMO indicator crossed over to bearish. And what do you know? It hasn't gone anywhere since. And look at how it's been curling itself over. This is like just what we saw in the monthly time frame, curling itself over, cross over to bearish. You don't have the wind at your back. It's so hard to trade in these environments, and look at prices showing that. So even the weekly time frame suggests, not the place to be. Until this might cross over to bullish or start to curl itself up. That'd be nice to start to see it curl up. See this start dropping lower would be nice. And then also to recapture that weekly 5 EMA. We closed below the weekly 5 EMA again last week, and now, the start of this week is not looking all too hot. We'll see where it finishes. Perhaps we come down, test this trend line, and then bounce back and create another hammer candle. We've seen that happen multiple weeks. All right? If you look at the daily time frame, this could be flagging. A rising wedge, whatever you want to call it. I don't know. We can see here, we've been talking, once we got down here and recovered, we said, okay, where can it bounce to? Well, the moving averages. Right up here in the middle of the Bollinger Bands, which is the 20-day moving average, which we're using. Then you have the 50, 100, they're all flatlining. It's curling down. This candle just engulfed the previous 2 trading days. It looks bearish. Not the greatest sign. The price percent oscillator, it's below 0. The histogram is starting to curl down. There's a lot of work that needs to be done here. This is not something that I'd be like, yep, I'm going to go long right now. You can get lucky, but also you can just get obliterated. And why would you want to get obliterated? Now, from a bullish perspective, if you were shorting this, ask yourself, okay, if I wanted to short this, which is not a horrible idea at all, that's actually probably a good idea because it makes for a good risk to reward. You can just literally have a stop above the upper Bollinger Band. You can short if we catch a little bit more bid, or you can short into this weakness. Look at the RSI. This actually looks like a good short. But where would you cover? And that is important to note, because where you would cover means you might see people where they also buy the dip. And if you get people to cover, you get people to buy back their shares, right? So me personally, it would be right at around this 210 to 215, 16 range. Why right there? This zone in here. It's kind of a big zone, but you have the 200-day moving average still sloping up. So that's still bullish as of now. And then you have previous support and you have the lower Bollinger Band, this little confluence zone. So if we start cracking down through all of that, watch out. That is not a good sign at all. But we might not see anything like that take place for a while. We don't know. We really don't. I will say August and September, October, they're typically bearish. So that is mean to me, it's setting for the stage for cracking down through this or resolving to the downside. What you would like to see is this consolidation resolve to the upside, because then we can go crazy buying small caps again. I mean, this time was from November, boom, all the way. That was a fun time. But now we're sitting in this, oh my gosh, how long has this been? 1, 2, 3, 4, 5, 6, 7 months, 6 to 7 month consolidation. We're right there in the middle of it. All right, everybody. That's all I got for you on today's episode. This weekend, I'll be posting more analysis on gold and silver. So keep an eye out for that. Let's just wrap up with my thoughts. My thoughts is this. Based on seasonality, which has proven to be quite effective so far. Based on seasonality, it does suggest August, September, they're going to be kind of rough months, which means what? It means that we're going to look for defensive sectors to potentially get more bullish in. You could short individual companies, that's totally fine, or ETFs. If you were to short, I'd start looking into probably the Russell or the IWM. Okay? Volatility typically picks up in August, September. All right, in the S&P 500. You can already see utilities performing well in multiple different periods of time, 1 month, 1 week, and then intraday starting the month. It can change, yes, but you probably want some sort of exposure to these defensive sectors, because if we do start catching bids within those, or even if you have a lot in your portfolio, chances are they can outperform the S&P 500 when the S&P 500 starts underperforming. Okay? A lot to go over today. We went over a lot today. That's all I got for you on today's episode, though. Hope you have a wonderful